Hey, it's Anne Wilson, the Welsh chef, and
Nerina Visser, lovely to be with you on a beautiful, slightly overcast day, but with lots of warmth and love here where Anne and I are sitting.
this is so cool to be with you. Nerina and I were busy plotting some great additions to the PIMS program and some other great collaborations that we're going to be doing in 2017. And if you don't know her yet, Nerina is, well, besides being just one of the coolest people I know, incredibly abundant, who brought the coolest cake for our session, is also an incredible guru, and I use that word very consciously, but is one of the world's greatest experts on passive investing. This is these things called index trackers that I just love so much about that. You know, Tony Robbins and his book Money, I mean, he goes on and on and on. He could have written what he wrote in that book in about the length of the Wealth Chef book, but he speaks about index trackers. You know, it's these amazing passive investments that more and more money is going into every day as people realize how powerful they are to really get their money working hard for you. So Nerina is one of the world's experts on this. She's actually in 2017 going to be the president of the
CFA South Africa Society.
So that's your Chartered Financial Analysts, and so just an absolute expert in this area. So while we're here, I thought, well, let's have a conversation with you about
what we love. I like to refer to this as, because we are so passionately passive, we see these things that happen in the world, and most recently, most of us got somewhat trumped, and we sort of stopped and said, what's happening in this world? And as index tracker experts, as passive investors, how do we deal with this? What do we do with this thing being trumped on so many angles? And I think we all hear so much noise in the market, and especially on media, whether it is traditional media or whether it is social media, we seem to be inundated with these stimuli that say, you need to react, you need to do something, things are changing, and the world as we know it has come to an end. And I think Anne and I shared this morning that so much of this is more almost to be seen as entertainment value rather than something that you really need to react to. But I know I can't just be dismissive like that. I actually have to say, what are the real issues that have changed since Donald John Trump? By the way, I learned yesterday that's what the J stands for. Ooh, DJ Trump. It's like he's playing us like a record. And what do we need to do in terms of how has the world changed? And do we even need to do anything, or are we okay as we are?
Absolutely. And it's hard to believe that, you know, we all, I think, in a way are still reeling a little bit. And so this is exactly what we just wanted to connect with you today. So it's great to already see Sharon, Luann, great to see you. And just, you know, being live, you know, put in any questions you've got, any real concerns, and there's two key aspects that we want to cover. I'm going to be grilling this amazing woman and her incredible brain on just what should we be expecting, what may happen in the markets, what's happening with passive investments like these things called these ETFs and exchange traded funds, these index tracker investments, what we should be doing with our own portfolios, about going in, and then we're also going to briefly cover some of the mental behavioral stuff, which is the stuff that I really love, and what we need to be hyper alert of in our own side of some of the things that we can inadvertently do in times like this, of when there's been big fluxes and change, and in fact quite, you know, for want of a better word, quite a lot of trauma. You know, what can end up doing where in fact it's not, sorry, just a little message on the screen there, it's not often what the event that is the problem, but it's what we do based on the meaning we give it that can absolutely screw us up and screw up our financial well-being versus where we're going. So we got Sally, hi. So this is so cool.
And one of the things that I read just yesterday that I thought was really interesting is, I think when these unexpected events occur, one of the things that causes so much angst for us is this feel of not being in control of what's happening around us. And it's that fear and the anxiousness that come with not being in control that causes a lot of these behavioral issues that we deal with. And before we even get into the details of the specific Trump election and event, is just to think in terms of that what you can control is your own reaction to this unexpected event that occurred. And that's what we're trying to help you with today, is to share with you how to help yourself in terms of how do you control your own reaction, your own fears, your own interpretation of what's happening, to make sure that it is appropriate for your investment goals and objectives.
So, passive investing guru, Nerina, and Nerina's been all over the radio and TV this last week. So I'm just going to ask you what are some of the common questions that you have been asked in this last week?
So I think some of the things definitely started out with, how did we miss this? How did we not realize that this was going to happen? So for me, an important lesson in all of this is that I think as we are increasingly making use of social media as our primary source of news, and being out of touch with traditional media, social media is really this giant echo chamber. We tend to listen to people and follow people that resonate with what we believe and what we think. And the danger of that is this whole idea of groupthink, this whole thing of, I'm only going to engage with people who confirm my biases. And we almost consciously have to escape from that safe zone, from that comfort zone, and say, I actually need to engage with the other side. I need to try and understand why they think the way that they think, rather than just emotionally reacting to it and say, oh, you're a sexist, you're a racist, you're a bigot, and really try and engage with the fact rather than with the emotion of why what happened did happen. So we are huge fans of social media, but I think it comes with some dangerous, almost unintended consequences that all of us included, we need to really sort of address this up front and say, to protect ourselves also, we need to engage with social media, maybe in something that sometimes feels slightly less comfortable than certainly this conversation that we're currently having with you. So that for me was the first thing. The second thing that definitely then came out was this tug of war that we've seen in markets. Those of you that might have watched what was happening in markets immediately as even before it was confirmed that Trump was the president-elect, just the expectation that he would be elected, the extent to which the first reaction was massive falls. Everything goes down. Gold is the only thing. Gold price went up and everything else just fell in a heap.
And just that, remember, that's why you always have a little bit of gold, because it zigs when everything else zags.
Yay.
That's it, pims.
So what we found there was that those initial knee-jerk reactions very quickly turned to the other direction, and we suddenly saw the Dow, the US equity market, making new highs. We saw the US dollar making new highs, recent highs. We've seen some of the commodity prices, especially those related to infrastructure spend, so Anne's type of civil engineering type of stuff, her type of commodities, just skyrocketing, and at the same time, massive declines in terms of emerging market currencies like the South African Rand, but also emerging market bonds. So there were these big moves. And subsequent to that, we've seen some of that also come back again. So this tug of war is going on the whole time. And, you know, it feels a little bit like you're watching a tennis match, because it's like, what's happening? Where's this going? Where? And all the time, you're not doing anything. You're just watching all of this going on and feeling almost angsty because you can't do anything about that tennis match that's going on in front of you. So for me, that was the second awareness that came through all of this. And then I was able to sort of step back and say, all right, deal with my own emotions, and then say, let's just take stock and see, where are we in terms of what's transpired? What has changed? And a lot has changed, but what is still exactly the same, and what has not changed in a post-Trump world?
So, Nerina, what is the key thing as an individual investor? You know, I've got index trackers, I've got my regular investment in place. You know, what has changed that I should be aware of that might make me change what I'm doing?
So the first question to always ask yourself is, what has changed in terms of your own investment goals and objectives? And unless you are maybe, I don't know, Trump's child or maybe his closest advisor, I don't think anything much has changed in terms of your or my personal investment goals and objectives. And I think that is absolutely key, because that's the starting point for any investment decision, is what am I trying to achieve with my investment out there? That's the first thing that you do. The second thing is
and
to say...
before you get to the second thing, this is so key, because really, you know, what are we saying here? nothing has changed.
Absolutely.
You might feel everything has changed, but actually right now, nothing has changed. So let's come back to exactly what we're talking about when we're talking about the stock market. With your passive investments, your index tracker, be it in the FTSE 100, so the top 100 companies on the London Stock Exchange, the S&P 500, maybe an emerging market fund, maybe it's an industrial index. Remember, that's a basket of shares in companies. So that specific company that you have got a share in by virtue of your passive investment, what changed from yesterday to today? Well, nothing really. There may be policies that will affect that the economic viability or the profits of that specific sector down the line. But today, what has changed? You are still investing in individual companies. So this is so important that we always come back to, there's all this noise going on. The market's going up and down. What should I do? Should I be in? Should I be out? What are the things to do? Always come back to, okay, hang on, what's the truth? What actually is at the core? I invest in shares in individual companies through these things called passive investment funds, index trackers, exchange traded funds, which are low cost, meaning they don't have a lot of overheads on them, so I get great value. Nothing has changed there. And why do we invest in them? We invest in them because we don't pay a whole lot of fees to other unnecessary non-value added stuff like financial advisors and bits and pieces, and because we get more of our money working for us in those companies. So that medical company that is providing medical services to your aging baby boomers, or that company that sells a whole lot of beer, whatever your ethical standpoint is, hey, people are still drinking beer, or they still needing those medical services, or they're needing that infrastructure. So we go, suddenly the world didn't implode. So really key is that nothing has really changed, and therefore that really side goes, okay. So I think this comes to point two. So therefore, what do?
Exactly. So point two then very much is about, what has changed in the environment? And Anne has already indicated that although there might be some individual companies or individual sectors or industries that will be affected in a post-Trump world with new policies, and certainly there will be some changes, actually on aggregate, most of what happens in the companies that we are investing in through these index trackers, nothing has really changed for them. And certainly nothing has changed for them yet. And I think it is that yet, but that's where another big part of the tug of war is coming from, is it's largely still speculation and conjecture. Analysts trying to make sense of what did Trump say during his election rallies, and we're going to build a wall. No, we're not going to build a wall. It's just going to be a fence. We're going to spend lots of money on infrastructure projects. I'm going to cut taxes. No, you won't be allowed to cut taxes. So there's all of this conjecture that is taking place that's causing a lot of the noise that we're seeing at the moment. Until there is actually more specifics around policy changes, we really are at risk of making inappropriate investment decisions on the basis of speculation, on the basis of media that is trying to create sensation, create headlines, when things have still not changed at all. I think we saw a similar experience with Brexit.
I was about to say,
absolutely,
like deja vu.
It's like Brexit, take two. And I think our reaction is like Brexit, take two. So, and these things will continue to happen, and they will continue to be a factor in how we make our investment decisions. And like take two, we need to say to ourselves, you know what, nothing has really just changed yet. But there is massive uncertainty because we will see policy change. We will see a focus change, all of these things. So how do we best deal with uncertainty? So there's a couple of factors that we deal best with uncertainty.
Because I think this really talks to Luan and said, do you foresee any market changes, areas that we should take advantage of when he takes office in January, or is that also unlikely? So Luan, this is really key.
Exactly.
We don't be careful of doing crystal ball stuff. And this is so important. When this is what we cover in PIMS, which is why we love passive investing, is the market in itself auto-corrects. The very nature of having a basket of tracker funds that reflect what's happening on the market is if something shifts in policy, and you might say, oh, well, we're not going to catch the front end and back end, but remember, as smart wealth chefs, smart, actively passive, we know that trying to time the market, trying to use a crystal ball is a complete fool strategy. And in fact, it's a pretty guaranteed way that we lose money, because that's called gambling. And what we're about is real wealth creation.
Absolutely.
And so we understand that one of the reasons why we love passive investments and index trackers is the very nature that, let's say, policy means a shift to another industry, and there's a whole lot of money going in. Companies that are in that are effectively and well managed and that have great earnings per share and great value will increase their market share on the market. And so they may go into that top 100 tracker that you've got in or not. And so it adjusts by its nature and so we can get on with our life. So this is really key. But back to Nerina on
well, again, what I want to say
uncertainty.
is following on from what Anne is saying, there is a lot of uncertainty. We don't have the crystal balls. Even professional investors are really just guessing at this stage.
They're always guessing.
And even more so at this stage. But what we are saying is that the way that you deal with this level of uncertainty is through diversification. You don't try and bet all your money on just that one horse. You don't go and play just red on the roulette table. You want to have a diversified strategy so that you don't have to worry about, are the infrastructure companies going to be the net winners? Or should I be in healthcare? Or this is about being in China or not being in China. You don't have to worry about those sort of decisions, because your index trackers, if you put them together also in a well-diversified portfolio, means that you've got a stake in the game everywhere, and that the natural winners will necessarily rise through in your portfolio as well. So deal with this by ensuring that you remain as diversified as you possibly can. Diversification across asset classes, diversification across geographies. So not only being in America, not only being in China, not only being in South Africa, but being diversified geographically. Being diversified from a currency perspective. Don't have all your money in the pound or in the dollar. Have your money diversified with that. Being diversified across different sectors, different industries, different economic cycles. This also talks very well to what Anne talks about in terms of an online business that is really not cognizant of geographic boundaries. One of the expectations...
Look at all of you here today. It's so great. We got Ziara, we got Kelly and Wayne.
Wonderful. So you see, when we look at what the expectation is a Trump presidency will bring to the US and to global markets, is a reduction in globalization, an inward focus, and really sort of going to, I almost want to say, the bad old days where it was just every man for himself. But through your investment strategies, you have the ability to maintain that globally diversified investment portfolios. And because each of your index trackers does a lot of that diversification already for you, you don't need to try and second guess or identify which is the right company, which is the right sector, which is the right country, which is the right currency to be invested in. Maintain diversification and all will be fine.
And this is really key, maintaining. So what does this also mean? It means you keep doing what you were doing.
Yes.
Now, if you weren't yet being a regular investor with that monthly regular investment into this portfolio of funds, then we've got a great webinar for you. I'll put the details in the chat afterwards here, because I can't quite remember the URL for you to get here, but it's about 3 money hacks, and where Nerina and I go deeper into passive investing. But here's the key thing. You've got to keep the key to creating your financial well-being and your financial freedom is your wealth habits. So your wealth habits are about these things that you consistently do over and over and over again. So this is your regular investing into a low cost meaning you don't have a whole lot of heavy overheads, onto these great passive investments in your index trackers in the form of your exchange traded funds or your index tracker mutual funds, and then doing it over and repeating it. So you take advantage of this thing called pound or dollar cost averaging, so that when the market goes down, you get more. When it goes up, you get a few less units, but over time, this builds up. And this is so key, because what happens when we have quite traumatic events, or we have events that aren't ones that we expected? Because, when I'm speaking live at Arena elsewhere, I'll often say to people, do you love surprises? And people go, yeah, I love surprises. And I go, bullshit. You only like the surprises you want. None of us truly like surprises. Like, oh my God, So the thing when a surprise happens, or maybe something that you weren't expecting, so we can call it a trauma, whatever you want to call it, a tromper. We can call a whole new name there. Two things often happen when we go into any kind of fear. We can either go into flight, so we just want to run away. So what does that mean in terms of investing? People go, okay, I better just be out of the market. I'm fearful of that. So they withdraw and they stop doing what they were doing and go, okay, I'm fearful of this. Now, this happened in 2008. People ran and went, oh, the stock market is a scary place. I'm going to withhold. And as private investors, that's the likes of you and me, but also institutional. This was big companies. And so those of us, like me, a little bit boring, who went, you know what? Protect money from me and my emotions. Just keep doing what we always did. This almost boring rhythm, this drumbeat of regular investment every month. Go into this nice diversified portfolio of index trackers and get on with my life. We experienced one of the biggest bull runs of just year-on-year exponential, incredible growth. 20 to 30% growth in the FTSEs, the S&P, and so on, while most people sat on the sideline. At Financially Free You Live in London, that's the live event I run. One of FFU has shared that after Brexit, she looked at her portfolio and was horrified because it had had this big drop, and she's in the UK, but went, hang on, what has Anne always told me? Just keep doing what I've always done. And so actually upped her contribution into the different portfolio, but in this regular size. And in the 3 months since Brexit, has had the most extraordinary growth. Yeah. So here's the thing, and this is where I just want to go, notice either flight, want to get out of it, or fright. What also comes now in nature, a lot of animals, if there's a big fright or they're fearful of this predator or something coming to eat them, they hunker down. A lot of birds do this. When I go walking, I see that they especially with their chicks, they just hide down and stay frozen. So hopefully no one sees. Now one of the worst things that I just really want you to be aware of, are you going into paralysis, literally this frozen, going, okay, I'll do nothing. Right now, and it might be with your investments, but it might be in all aspects of life, this fear of like, well, what's going to happen? So I'm just going to stay frozen, and this wait and see. Waiting and seeing is the worst thing you can do for your financial well-being. We need movement. We need momentum. Breathe. Just breathe. Remember what we've said. Nothing has really changed. Go back to just taking steps. When you've got momentum, when you've got movement, you're actually far more resilient. You're able to do things. You've got liquidity. You've got this energy. Just get back to dancing in this thing called life. But that also includes with your investment. Keep doing what you need to do. Momentum, this regular step is how you create your financial well-being.
Yeah. I would like to finish off with an analogy that I shared with Anne earlier this morning, which I think really talks to a lot of what Anne has just said also, is what we're experiencing at the moment is it's like we're on a boat on a fairly volatile sea. The waves are really sort of knocking us about, and you're feeling queasy and sometimes even proper seasick. Now think of what are the two things that you are advised to do if you're on a boat and you are feeling seasick. The first thing is to look to the horizon, to look far. Don't look down at the waves below you, because that's going to make you feel even worse. So look towards the horizon, look towards your goal.
Back.
Exactly. You look forward to the beauty of where you are going towards. But the other two important thing that you're advised to do is to get out. Don't sit inside the boat close to the engine where there's fumes and there's stuffiness and where you don't feel good. Get outside, move, as Anne said, but also get that fresh air on your face. Get some perspective. Get some of the good stuff that is outside, which will help you focus on something other than the violence of the waves below you. So I think we are very much at the moment on a boat, and we feel as though the seasickness is going to be overwhelming. Think long-term horizon and think in terms of lovely, cool breeze, fresh air, and you'll be absolutely fine.
Oh, well, I can't believe it, just how time flies when you're having such fun. So thank you for joining us. And as I said, there's a great webinar. I'll put in the URL. Jump on that where we can go deeper in really understanding how to use these passive investments to really accelerate your freedom, and just why stock market investing is so powerful, specifically being an actively passive. So with Nerina and I. And just for those of you connected and would love to just know, give us a thumbs up or some hearts or whatever it is, or just let us know, would you like more of these kind of sessions? I mean, I love this woman.
I love this woman and I love doing this with her, but we'd like to know if you would love to see more of this also, because as we're doing our planning for 2017, we know that we would love to spend more time with you, but tell us if we are welcome to actually be part of your life in this way in the next year.
Oh, well, Lisa Dawson says, wise words, love the analogy. Absolutely, a cool analogy, hey? But the horizon's always smoother. So great, Luann, you said you'd love, you would. So this is great. I think what we'll do is sort of reach out and go, what sort of topics? Because there are so many aspects of just whether it's just from choosing your online broker to just some regular commentary or view of where we look forward to. So great. Sharon said, yes, please, more. Lisa, well, it looks like that's a thumbs up.
Absolutely. Well, then it's a thumbs up from me too.
And of course, then I get, I've got to show you, the danger part is Nerina's, she's got two amazing chefs in her family, both her husband and her daughter. So that's all that's left of my cake. So it works for me because
the best part about it is that was really healthy cake. It was gluten-free, it was sugar-free, but it was full of taste. So trust me, we are loving what we're doing here and we'd love to do more of this with you in future.
Oh, and so wonderful to share with all of you, Catherine and Heidi and Sherry. And so we're going to let you get back onto it. So remember, just to recap, nothing has really changed. Take a deep breath. Don't try and have a crystal ball and preempt what may or may not go forward. Know that the very strategies that we teach you about how to invest in these passive investments, about how to get that portfolio together, are effectively Trump-proof. They're politics-proof. Whether it's Brexit or Trump or whatever next thing that politicians do, what we're absolutely committed to do is giving you the resources and the training and the skills so that we're not susceptible or vulnerable to whatever the latest political whim is. And this is exactly what you're already creating in your life. And by following these strategies is what you do. We're Trump-proofing.
Absolutely. Focus on the horizon, get outside, get that fresh breeze on your face, and that's the way that you will trump the investment market.
Oh, God, we're so wonderfully cheesy. Bye, everybody.
Bye, Nerina. Bye.